welcome, a very warm welcome. You're watching Your Trades on ET now. The first day of the week, but the last day of the month, and the move, the stellar rally that looks like to have come on a halt. After a record run of indices, Indian indices, we were expecting to close on a positive note, but today we saw some kind of pressure building up, and it started from the start of the day only.
Looks like Monday news did also make their way here.
Yes, let's understand. We'll understand what is spooking fear in the markets, but then benchmarks traded in the pressure from the start of the day itself. In fact, Nifty opened with more than 100 points of cut. It built onto it, kept on dragging and closed near the lowest point of the day. Bank Nifty closed lower by more than 800 points. Sensex dragged by nearly 1,000 points. Now the trend on the Nifty looks still long and winding, but the trend on the Bank Nifty has reversed. Now it's a short built up. We've seen a lot of lower strikes like 25,700, 25,800 that are being bought into. Now, majorly the heavyweights that drag down. In fact, if you look at the Nifty complete heat map, there were just a handful of stocks which closed in green today, and that to be news-driven stocks which closed in green today. Reliance, ICICI Bank, they themselves have contributed the most in dragging down the in the entire Nifty downwards move. The only stocks which closed in green were metal, couple of the metal stocks. Of course, the entire metal pack, but we're talking about the Nifty stocks, JSW Steel, Tata Steel, and some selective stocks like NTPC. But the kind of move we've seen on metal index, that has continued its rally, and the positive set of news which is coming in from China, that continues to trade not just even the Chinese market. In fact, Asian markets, if you track about the Asian market, China had the best trading day since 2008. Hang Seng is up. Nikkei is of course down. There are a lot of political developments which is taking place in there, which has dragged the indices down. There's a much bigger cut coming in, but the metal stocks, they shine on the back of the China stimulus, and the fresh data which came in was a China PMI data. It has contracted for the fifth month, but the contraction is lesser than the expected. That's what took the metal stocks high. But the bigger point, Shriyansi, what is spooking fear in market is the Sebi boards, which is expected to meet at 4 p.m. today, and there are anticipation about stricter norms coming in for F&O contract. That's what is fearing the traders right now, and seems to be there's a broad-based selling what we're seeing in the market.
Well, absolutely, yeah. That is also something that we're keeping a very close eye on. But you know, when you take a look at some of the other movers, you of course still have PB Fintech, and the company went ahead and cleared the air around the report on their healthcare foray as well. That is the important one, because you did have Yashish Daya as well as who's the chairman of the company, as well as Alok Bansal, the CEO, mentioning that the company plans to make a one-time investment of $100 million. That is something that they've gone ahead and clarified, and we did see some support coming in earlier in the day when it comes to the stock, but now it's just sort of has a tinge of red coming in. But when you take a look at some of those two-wheeler counters as well, those are the ones that are in focus. Now, UBS, of course, has come out with a note, and they are saying that there's very high discounting seen in two-wheelers, and that is something that is very important. Now, in terms of the festive season as well, they've gone ahead and said that two-wheeler discounting is going to be high during the festive season itself. So in terms of the counters or the products that they're talking about heavy discounts coming in for Hero Extreme 125 as well as Bajaj's Pulsar. So those were the counters to keep an eye on as well on the back of this UBS note, and that is something that will remain in focus. But let's also take the conversation forward then with Chandan Taparia, derivatives and technical analyst at Motilal Oswal. Chandan, I'm going to come to you. Thank you so much for taking time out and joining us today. But you know, what do you make of this kind of market move that we've seen? We've seen a tinge of red, be it the Nifty, be it the Bank Nifty, be it the broader markets. We've seen it across the board. So what do you make of this thing?
Good afternoon. Thanks for having me. So first of all, we need to understand that market already seen the good momentum in last couple of weeks. Nifty completed its 81-day cycle. The rally started from the panic low on 4th of Jan when the index was near 21,281. And from that level, we continue the momentum. And on Friday, the Nifty made high near 26,277. So already we have seen a decent run up, but in last 2 days, we have corrected by around 500 points. So there is no doubt about the major trend that is intact to positive. But as index failed to surpass a key hurdle and also failed to surpass a resistance trend line of its rising channel, so witnessed some profit booking decline. It completed its 14 weeks swings from the previous swing high. So multiple things are working. First, as per the time cycle. Second, formation of a bearish candle on Friday. And some surge in the India weeks from the lower levels and kept upside due to the coal writing activity. So I believe because of that, some profit booking could be there. But multiple supports are there near 25,650 to 25,500 zone. I believe if this profit booking continue, then it may go and respect near to that level. But I believe with the support of 25,500, index can again head towards the higher level of 26,250 to 26,500. So I believe this corrective move can see 6 to 8 days of the price or the time correction. Then only the next leg of rally could be there in the market.
That you're saying the time correction cannot be ruled out, and you see the action shifting to the lower levels right now. And we've seen that the kind of buying action we've seen at the lower strikes. So the crucial support are very. One has to be very very careful of the lower strikes now. But then, Chandan, what do we make out of the entire factors put in together? October seasonality, gush of liquidity coming in, and of course the kind of rollover figures. Are there chances of bounce back near time soon? And what would be your two trades that you would want to recommend here?
Yeah, so if I look at the rollover data, rollovers were in line in Nifty, but slightly lower in Bank Nifty. We have seen built up of long position carrying from the current series to the previous series to the current series in Nifty, while some short covering was seen in the Bank Nifty. So there was no worry at all in the rollover data. But already we have seen good run up, and market has gone to the slightly overbought scenario. And important part is that Bank Nifty moving in a rising channel from last 3 years. And recently it has taken hurdle at exactly upper band of the rising channel. So it's more of the technical corrective move, I believe. Now, looking at the global sentiment, if that recovers, then I believe with the support of 52,500 or 52,215, Bank Nifty might recovery from lower zone. 25,500 could be the key support for Nifty index. But again, I believe some sort of time consolidation could be there in the market before bulls get the next leg of rally. So it's better to focus on the selective sector and the stock which are holding well and witnessing sustained buying interest. So we have positivity on the Nifty metal. Even after the market corrective move, the Nifty metal has been making higher top, higher bottom from last 6 to 7 trading session. And this index is trading at its lifetime high territory. So positive momentum. And this metal index has given a consolidation breakout of last 18 weeks. So most of the name, including NMDC, JSW Steel, Tata Steel could be in focus. And here we'll focus on the JSW Steel. It has been making higher top, higher bottom, holding well to its rising support trend line. Rollovers were better. So one can go long in JSW Steel with support of 1,005 for an upside target towards 1,080 zone. Second trading idea, we can focus on ICICI. One of the strongest name has been moving in a broader range. And now, as per its price closing, it can give a price breakout anytime soon. It has been consolidating in a broader range from last 62 trading session, but now holding well above its 50 DEMA with a decisive hold above 555 zone. So ICL could be other candidate which can generate the alpha with lesser market volatility. So one can buy with support of 545 for an upside target towards 585. So JSW Steel from metal and ICL from gas sector could be on radar in this market scenario for long side.
Thanks, Chandan, for taking time out and joining us. So Chandan is saying that it's time to be a little more sector specific when it comes to the bulls taking a breather for now. But let's also go across to Srishti, who's standing by with a daily dose of technical charts for us. Srishti, a couple of breakout counters on your radar there?
Well, actually, Shreyansi, though the markets were seen to be declining, the benchmark indices were under pressure, but it was quite hard to find any of those breakdown candidates. So keeping that aside, we have got you two breakout stocks, and you will be amazed to see the move in the IGL, because what a move that we have spotted. Because firstly, given the kind of a market movement, the stock was just going in the opposite direction, closed the day at the day's highest point, and it was very interesting technical setup as well, because you will see that it's sort of forming a range for itself. And for today, there was indeed a breakout of that particular range, the stock hitting its 560 odd levels and went very close to its 50 52-week high level as well, is now seen to be trading above its key moving averages and hence the breakout. So this is the first stock. For moving on to the next counter then, and we have got Tata Chemicals, because it's the whole chemical and agrochemicals theme that was seen to be buzzing. And from the pack, Tata Chemicals, you will see that there was indeed a breakout of a falling trend line for Tata Chemicals, now trading above its all key moving averages and very well supported by a long build up on the derivative side. So these are the two stocks we wish to highlight on the breakout side. Back to you guys.
All right, two of the stocks on the Srishti's radar are on the breakout side. IGL, even Chandan Line, and Srishti could also spot breakout on the charts for IGL. All right, moving on. Let's get you the word from the wise. We spoke to man from the Motilal Oswal, Pratik Agrawal, who's the Executive Director for Business and Investment Strategy for Motilal Oswal Asset Management Company to be precise. And let us understand what are his views on the Indian market right now. He's expecting some kind of consolidation in the near term. Let's listen to exactly what he said.
In the immediate term, we do expect some bit of consolidation, given that the rains in this period has been good, which means quarter two, the economic activity would be a tad impaired because of that. So as results come in, I think we should expect markets to be sideways. Long-term trend doesn't change. I think all the themes that we are talking of stay. So this is a time when in a quarter, if market doesn't move anywhere, valuations correct by 4 to 5%, which means in the next period we should look for some gains. Now, what is also happening is that in this period, the new issue calendar, QIPs, etc., is pretty heavy. So space would have to be created for them, which again should result in market staying flat.
Alright, and that's the word coming in from Pratik Agrawal of Motilal Oswal. Moving on then, starting tomorrow, new transaction fee revisions in both equities and derivatives will come into effect. Let's take stock of all of those changes with my colleague Ansh then. Ansh?
Right, so in line with Sebi's new measures, stock exchanges have revised their transaction charges. Exchanges have announced some revision in their STT charges. Now, for calculation of STT, future STT are based on a turnover value per crore, whereas option STT are based on option premium turnover value per crore. Now, for NSE, the charges are 297 rupees per crore for cash market, 173 for equity futures, 3,503 rupees for equity options, 35 rupees for currency futures, whereas 3,110 for currency options. Now, if you talk about BSE, then they have revised their fees for Sensex and BankX index option at 3,250 rupees, whereas the currency futures is at 45 rupees per crore, which was 35 rupees for NSE actually. Now, moving on to commodity exchange, MCX have given the charges of 2,210 rupees per crore for futures, whereas 4,110 rupees for options. Now, this changes align with SEBI's mandate for a uniform flat fee structure, eliminating volume-based advantages.
So transaction fees have been revised not just for MCX, in fact for the other exchanges also, for BSE and NSE also. Thanks very much, Ansh, for the detailed insight on the entire news. We stay for a short break here. More to come on the other side. We'll get you the action from the derivative space. Don't go anywhere. Welcome back. Now let's get your action from the derivative space. Of course, the trend for both Nifty, Bank Nifty has changed. Now the trend on Nifty appears to be long unwinding, and rather there's a short built-up trend for Bank Nifty. Now the VIX shot up really today, and that's a sign of clear volatility in the market, and that's what we saw in the market also. Now VIX is trading below 30, 12.8. Now lower strikes were being bought into. In fact, higher strikes like even 26,000, 25,900. These strikes were, there was a massive call writing on these strikes, and we remember that we could not even cross at one point. We were below at 25,800 also. Now the lower strikes like 25,700, 25,800, there is the maximum put buying action also happening. So looks like right now we can see a strong resistance, the cap on the upside, but then the support is still missing. There's no put selling. In fact, put buying is what we evidently saw on the derivative action.
Well, absolutely. That is what it looks like, and it'll remain to be seen how that unfolds through the course of the rest of the week. But let's also get going with the big story of the day, then shifting focus to the auto space. Hero Motor has been under pressure on the back of market share losses triggered by tepid 3-month registration figures. Not just that, the entire two-wheeler pack is in the spotlight on the back of a UBS note as well that flags hefty discounts as well as building inventory pressures in the sector as well. Now, UBS also expects discounts to continue amid the festive season. Let's go across to Srishti, who's standing by with more details. Srishti?
Well, for the two-wheeler segment, though the demand expectation is quite robust, but on the flip side, UBS is highlighting that the discount is seen to be intensifying, and that indicates that there is increased competition and inventories are piling up, and that's why the dealers are pushing more discounts. And interesting to note that it's the e-commerce platform where consumers are lured with a lot of discounts, and especially with some bank offers as well, wherein in the likes of Hero MotoCorp, the total discount range between 11 and goes up to 18%, while for Bajaj Auto, the discount is from 12 to 16% of the range. And that is interesting to note that when we compare some of these low-cost ICE variants from the likes of Hero and Honda, that's actually expensive than one of the low-cost EVs, because Ola's the most affordable model is now costing rupees 62,000 with taking note of all the discounts that are available. And in comparison to that, if you look at Hero MotoCorp Splendor Plus, that is the most selling model for Hero MotoCorp, that's standing at around 69,000 of rupees. So that's the kind of market dynamics that is shaping up there. The e-commerce where you are seeing a lot of discounts that are pouring in just ahead of the festive season, and that indicates that the inventories are piling up. And from the likes of Hero MotoCorp as well as Bajaj Auto, these companies are now offering a discount in double digits. On the back of that, UBS also notes that it's TVS Motors that has actually gone ahead and gained some market share. And on the flip side, Hero MotoCorp is on the losing end. They have lost the market share, and UBS continues to maintain their buy rating on TVS Motors as well as ICICI Motors. But for Bajaj Auto as well as Hero MotoCorp, UBS does have a sell rating, and that's why we are seeing both these counters, at least Bajaj Auto as well as Hero MotoCorp, being the top losers in Nifty 50 today. Back to you.
Interesting, but of course, the way she started, that the demand is intact. And in fact, UBS a few days back, only last week only, came up with a sell rating on Hero MotoCorp, and now they've come up with a sell rating on Bajaj Auto also. But then let's see, the sales figures may pan out in a different manner also. Moving on, talking about the stock, news around the stock has been doing rounds, and it's about PB Fintech, which has cleared the air around the reports on their healthcare foray. Yashish Dahiya, who's a chairman, and also along with him, Alok Bansal, who's a CEO, they both mentioned that the company plans to make one-time investment of $100 million. Let's listen in.
Policy Bazaar is an investor investing between $0 to $100 million. And yes, you can argue it is investing in an asset-heavy model. That does not make Policy Bazaar itself an asset-heavy model. That is less than 1% of our market capitalization is going in this direction. So this will also in some way go in a franchise model. However, at the initial stage within the national capital region, it has to be a controlled experience where, because you want to give a great customer experience, you have to in some way own the assets. Now, that does not mean PB Fintech is owning the assets. I want to clarify this. Let us, for lack of a better word, call this XYZ company. This XYZ company in the initial 3-4 years owns a lot of its assets. This model is very well proven all over the world. It is called a HMO model.
All right, well, there were a host of stocks that were buzzing away in trade other than PB Fintech as well. When you take a look at Aurobindo Pharma, you're looking at cuts of about 3% coming in for that one. When you take a look at NMDC as well on the flip side, 4% gains coming in for that one. Gaurav is standing by with an extensive list of stocks that we need to keep on our radar there.
Well, yes. Let's begin our list with Bank of Maharashtra today, because media reports suggest that this bank may come up with a QIP, and the size of the QIP is going to be somewhere around 3,500 crore rupees. As a result, we saw some uptick in this counter. Up next we have is NBCC, because this company recently won an order from NHAI, and the order value is going to be around 101 crore rupees. As a result, we saw some uptick in this counter as well. Next we have some pharma stocks. So first let's talk about Aurobindo Pharma, because this company recently got US FDA's inspection, which they concluded, and they actually closed this inspection with 10 observations. As a result, we saw some pressure in this counter. Next we have is Alembic Pharma, because the US FDA has actually given final approval for the tablet which will be used for the treatment of schizophrenia, and the total addressable market is going to be around $48 million, and as a result we saw some uptick in this counter. Lastly, let's also watch out for NMDC, because the news is that when we talk about iron ore prices, they have gone up almost by 8% globally, and that is going to benefit NMDC. The main reason why iron ore prices went up is the easing in the housing market in China, and that is why we saw some uptick in this counter. So definitely watching out on all these counters on the back of the news flow that we have received today.
All right, thanks very much, Gaurav, on the list of stocks that you've shared with us. Thanks very much. Well, that's all in this edition of Your Trades. Thanks so much for watching, but for more updates, stay tuned to ET
If you like this video, then like, share and subscribe to ET Now.